We're looking at the day ahead, Victoria, looking at futures under a bit of pressure, at least the NASDAQ and the S&P. What are you expecting following the release of the Beige Book yesterday that showed inflation is cooling?
Yeah, it's interesting. You have that information coming out of the Beige Book, but at the same time, we're looking at Brent going higher, back up to $90. We're looking at food prices going higher, not just in the U.S., but globally. So there is some conflicting information that we're getting, and I think that's kind of the story that we've had for quite a while. It's why we've seen the volatility in the market that we have, and I think we're going to continue to do that. I don't think the Beige Book changes anything at this point. Everyone's going to be looking for the CPI numbers next week and see how that feeds into the Fed's plan. We know that the number of rate cuts has continued to come down in regards to the expectations from the market. The question is, how much higher does the Fed go until they pause?
All right, so quite a few questions for the markets right now. With that in mind, what is your WEX word of the day?
Yeah, so my word is simmer. And I say that because I think that's really where the market is right now. It's not at a full boil. It's not sitting there doing nothing. It's really kind of simmering, waiting to see where the Fed path is going to lead, waiting to see, do we continue to get disinflation, or do gas prices, do food prices push that inflation number back up? Do we get some kind of moderation in rents, or does that stay sticky? I really think that's the key component. Now that we're through second quarter earnings, everyone's going to be focusing on that inflation component.
All right, so you're watching inflation. Another thing I know you're watching is a technical indicator. The S&P dipping back below its 50-day moving average, and you actually did a little research on this. About a third of S&P stocks are actually below their 50-day moving average. What does that tell you, and what insight does that give us for the day ahead?
Yeah, so you're obviously looking at momentum in this market. This market has continued to trade on a lot of the momentum swings that we've seen. It's why we've had the volatility that we've had, especially in yields. So this tells us that, that strength in the market, that upward trend, could be at risk as we go back to that 50-day moving average. We had energy move above its long-term moving average, but yet the stock market as a whole, the S&P, moving below its 50-day moving average. So I think it tells you have to be a little bit cautious. You have to look at companies specifically, not sectors in general, but find those companies with strong balance sheets that can do well in a volatile market.
All right, speaking of that, you gave us a few picks. One of them is Dick's Sporting Goods. In the retail space, has been under a lot of pressure right now. Why is that a pick for today?
Yeah, so as I mentioned, we want to find companies that have pulled back a little bit, but we think can do well going forward. Dick's Sporting Goods had a huge pullback after its earnings, talking about the shrinkage, but really the inventory issues that they had that worked on their margins, pulled their margins down. I think that's priced into the stock. They can fix their inventory levels for next quarter, and we're going into a holiday season. So I think with the pullback they've had of over 20%, you can have a little bit of that position in your portfolio and take advantage of maybe a move higher.